All right, good morning. Happy Monday, Rhino. So cool. All right, so let's get started. Give everyone a second to get in. La, 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 la. Let's see who we got. All right, the VIPs are here to start. Really, really cool. All right, so just give me a second to get myself situated. I'll give you a second to get in, get comfortable, nice, nice. All right. All right, let's see. That is ugly. Seriously. All right, we'll give it another couple of seconds. Let's get started in a minute. Looks like it's a little bit slow to get the day started. It looks like a little bit of tardiness on a Monday. All right, cool. Good morning. It's going to be a very interesting day. Yeah, Amy, it is. All right, so let's get started. It might not be that long today because honestly, we don't have many participants in just yet. It seems like everyone is a little bit tardy on a Monday, which is fine, but that's their thing, right? So what's going on, right? So let's take a look back at what last week provided. Last week we had a lot of down, right? So Ukraine, Russia, what does it all really mean? And I gotta tell you, so we've now been together for probably a year and a half, and we've gone through episodes like this countless times. And every time one of these episodes happened, like, okay, so what kind of episodes are we talking about? We're talking about how many different times have we been in a situation where the world is coming to an end, right? Everything is horrible. Everyone is selling everything. And when that sells, and when everyone's selling everything is going on for a long period of time, people find new narratives to why you're selling, right? So say, for instance, the market's down today, then it's down tomorrow, then it's down the next day. Well, the reasons we thought it was going to be down, or the reasons we said it was down, makes sense, but now it's down even more than that. So what reasons don't we know? Why is it still down? Okay, well, I thought it was down because of A, but maybe it's down because of A and B. All right, well, if B is the case, that explains why it's down. It's down, it's down, it's down. But now it's down even more than that. Oh my God, what am I missing? A plus B plus C. And people start creating narratives to go ahead and explain why the market's down. Now, if you go back to January, we've said the whole entire time that we believe that the market was always going to be down January and February because we believe that the Fed is in a position where they can't raise rates as aggressively as they want people to believe they were going to be. And in lieu of being able to raise rates to combat inflation, what they would do in lieu of that is to go ahead and bring the market down so that people's stock accounts went down, people's wealth effect went down. Therefore, if you have less money in your account, and that's across the board, and supply chain naturally rehabs, like supply chain naturally came back online, because that's a duration type thing. Things that are hard to get today, you'll likely get tomorrow or the next day. You just got to wait a little longer. So as that supply chain reconciles and as the wealth effect comes down, you now have less money chasing more goods and services, which means the price increases that once one saw because of inflation is now actually coming down because now you have less money and you have more goods and services, right? See, after COVID, you had more money and less goods and services because companies were shut down, less supply out there. Everyone was able to hold on to their money. They had enhanced unemployment. All the different types of money came in. They paid their bills. They paid this. They paid that. Now real estate values are flying. They were super duper duper cash rich, and there was nothing to buy because the supply chains were all hurt. So you had increased money supply versus decreased goods and services. When you have all of that money chasing finite amount of stuff or a limited amount of stuff, price goes up. Conversely, we believe that's what would be able to have happened if the Fed went ahead and said, we're going to raise rates, we're going to raise rates, we're going to raise rates. And ultimately, you just kind of knock the market down. And now the wealth effect comes down and the supply of goods and services go up. Hence, it's the opposite of inflation, it's deflation, right? So we always believed that. We looked at that and said, this is what we believe they're going to do. Here's the problem with that. That doesn't take into account Russia. You see, Russia is one of the largest suppliers of energy in the globe. And by now, I don't believe I'm talking to anyone that doesn't know Russia, right? Like, if you watch the news even one day of the last 2 weeks, you are a Russian expert. If you watch CNN, MSNBC, anything, you know everything about Russia, you know everything about Ukraine. I think I'm choking on something. But, and that's just the way it is, right? Now, Russia, I believe, supplies 11 million barrels of oil per day. So if that oil comes offline, well, now you have a real price spike in the price of oil because now you're taking supply out the picture while demand is staying strong, right? We all know the economics 101 of that. Okay. Which is why everything's been sanctioned except Russian oil. Because when you sanction Russian oil, you're not only hurting Russia, you're hurting everyone. Everyone has to pay how much more at the pump. Which this is what Russia intended. Like, they're not stupid. In fact, Vladimir Putin is the highest approval rating president in the entire world. The nation of Russia loves Putin more than any nation loves any dictator, president, or whatnot. And you could say, well, Ant, those poll numbers aren't really true because if you don't say you love Putin, they shoot you. And I want to say that's true, but not to the extent that you think, right? Like, his approval ratings are 67%, which means 2 out of 3 approve of him, which means 1 out of 3 disapprove. And 1/3 of the population was not killed, right? So I do agree with you, but that's not the case anymore. Maybe today it is, like, because now you can't openly defy Putin in the streets because they're in the middle of a war. But sure, the approval ratings I referenced you is before that, okay? So what Putin's able to do is say, okay, you want to sanction me? Great. You want to go ahead and not raise rates because you believe that you're going to be able to bring inflation down? Great. What's the number one component of inflation? Energy. So it's kind of like twofold. The fact that Putin's able to go ahead and hold hostage energy, everyone needs to pay more if he takes it offline or if it's sanctioned. But at the same time, because the price keeps going up, he's able to sell half the amount of oil he sold 6 months ago and still make the same amount of money because that's the way the price has moved up. And on top of that, if you take a look at it, gold is over $2,000 per ounce in dollars. These are his 2 largest reserves, oil and gold. So he's doing quite fine. I heard this morning they were talking about, well, here's the problem. How long can he actually finance this war? Because his $650 billion has been sanctioned by the central banks, and he doesn't have money to be at war for months and months and months. And I say Putin knows that. It's not like he doesn't know his own financing, right? It is our belief he's going to end this probably the next week or 2, if not sooner. Ukraine, see, now here's the thing when you get into conspiracy theorists, which really isn't conspiracy theorists, because Joe Biden really did, before he ran for president, went ahead and sanctioned like the AG of Ukraine. In fact, there's that one clip where he says, yeah, if you want the billion, you're going to do what I say, right? His son really did go to Ukraine and has different contracts with Burisma and other companies. The Bidens really are embedded in Ukraine. So one could say, well, and it's funny the way politics works, right? Like when Trump was running for election, they threw so much at him. And it's the number one rule to go ahead and if you do not want to be accused of something, what you do is make a credible threat that someone else is doing what you believe you'll be accused of. Therefore, when someone goes ahead and finishes exonerating them and they say, well, it wasn't me, it was you. Everyone looks at it. All right, come on. Like, it wasn't you, it's me. What are we, 2-year-olds, right? And that's actually the way it works, right? So when everyone said, oh, Trump, he's in bed with Russia, it was this whole big thing. It was 3 years of special counsels and Bob Mueller and impeachments. And I'm not saying this as a matter of like, oh, Anthony is a Trumpist or not or whatever, but he was found not guilty, right? He was exonerated. meaning by the courts, by the decree, by the judgment, by the rule of law. That never happened. And if you believe something else, that's in your world, right? Like, but in the real world, that never happened. The point being, what really actually did happen was Biden with Ukraine and Biden with China. Here's the problem. Biden is kind of like a fool. Like, he gets played quite often. And you have Ukraine now in this war. And if you listen to Zelensky, the president of Ukraine, who was a comedian only 3 years ago, right? So let's not really pump this guy up. He was a comedian that got voted president. In fact, Ukrainian is Zelensky's second language. I don't know if he's from Russia. I think he is, though, right? Like, he wasn't born as Ukrainian. Ukrainian is a second language, right? So let's not really give him that much credit. He's on the TV and he's crying. We need your help. We need the U.S. and everyone to set up no-fly zones. You know what that actually means? Hey, U.S. and NATO, we want you to shoot down any Russian plane that flies over. And if you do that, well, then Russia is going to call war on you. Therefore, for us, Ukraine, we want you to go to war and put all of your citizens and everything that you have and go ahead and fight them because they're coming at us. Which I don't know about you, but I've been around long enough to know that's the most cowardly thing in the world. And to hold your country hostage so that you can have the whole world seeing people die, so that you can go ahead and cry to the US and everyone else that they need to protect your airfield so the US can get into a war with them, all because of you. That's crazy to me. But that's what they're doing. So why are they doing that? Well, Ukraine has 3 nuclear reactors in Ukraine, and they've always wanted to be the energy provider of Europe. They also have different pipelines that they would like to. They have a giant natural gas pipeline in, I believe it's Crimea, which is where Russia annexed them in 2014 when Obama when he drew that red line and they went over it anyway. It's like they only do this when Democratic presidents are in, but maybe it's because, I don't know, maybe it's their own. I don't want to get into conspiracy theorists, but they didn't do it when Trump was in, I can tell you that much. So Ukraine wants access to that pipeline. And Russia has Crimea. So Ukraine went ahead and depleted Crimea of the water that would take for that pipeline to actually then go ahead and work and send natural gas to Europe. So realistically, Ukraine, what they're really doing is an economic decision. We want to be the energy supplier of Europe. And if we can be the energy supplier of Europe, then us, Ukraine, can be one day as powerful as Russia. We can be big. We can make choices. We can dictate policy. We'll have a lot of money. That makes sense. I'm on board with that. That makes all the sense in the world. In doing so, what Ukraine has allowed is the US and NATO to go ahead and Trojan horse Ukraine into Russia. What do I mean by that? Do you know we have, I think, over 100 different biolabs, the US in Ukraine? Russia's like, seriously? The United States has biolabs on our border? Not interested. We've tried how many times to work with Ukraine to go ahead and put our missile defense system in their country, right? So we've said to Ukraine, if you want to be in NATO, you have to allow us to bring our missile defense systems into your country. Russia's like, whoa, you're not putting missile defense systems on our border. It's not happening. And US is like, well, you can't really do anything about it. Ukraine's a sovereign nation. They can make their own decisions. Ukraine's sitting there like, all right, we get to be the energy supplier of Europe. We'll just go ahead and play the US against Russia. And Russia's like, you know what? Hold my beer. Watch this. We'll come in right now, decimate your country, take over your capital, take over your nuclear reactors, and not give an SHIT what you have to say after that. And they can only do something like that if they had someone in their back pocket, right? Like Russia can't just do that. Well, what's the country that conspicuously is not speaking out against them? China. China hates the US as much as anyone hates the US. In fact, China is projected to be the #1 economy by 2030. So if Russia has the backing by the #1 economy in the globe, then they can really do whatever they want. If they have enough gold in reserve to back their currency, well, then you might want to buy the ruble. If they have enough of an export in terms of oil that they could go ahead and finance their entire war and finance their entire country, and the higher that oil goes, Putin's not stupid. He knows that the higher oil goes, citizens then take a look at their own presidents, right? We're not in this country saying, oh, we hate Putin because of oil. We're like, no, we hate Joe Biden because of oil, because that's our president. So every country then starts revolting against their own president. Here in the US, we have midterms this year. Do you think any Democrat's going to win with oil at $130 and going higher? Not happening, which means the new cast of people that come in are just getting there and seeing the world as it is, meaning those people don't have loyalties to things that did happen. They're solution-minded, looking at things going forward. Meaning, if I was taking a look at how Russia's doing, they're doing pretty good. Like, I just think they're doing a good job in terms of war. If you're going to say to me, well, and they killed citizens and innocent people. Yeah, that's wrong, like bad. We're talking about war, right? In war, you're going to have loss of life. Does that mean I am cheering loss of life? No. I'm saying if I was just looking at a chessboard right now, Russia's playing chess very well. The US is not playing chess very well. So what does that all mean, right? The reason I shared this with you, and I do it on purpose, right? Like I am triggering you. I know there's people that are in this right now that are like, Anthony, you are saying things that are out of control. You're cuckoo for Cocoa Puffs. That was so insensitive. I can't believe you. The point is, everything that I'm sharing with you is what the market believes. Again, this is a market educational program. You and I are not sitting having a beer, right? Like I'm not sitting with you and we're clanking and talking about our views of the world. I'm sharing with you what the market believes. The market believes that Russia is doing quite well. The market believes that the US and other places do not have an out, that they don't know what they're going to do, that oil could go to 200, 300, there could be nuclear war, blah, blah, blah. And if that's the case, well, you don't want to own stocks. You don't want to own different companies. So let's talk about McDonald's, because McDonald's, as you know, we own. Now, McDonald's, we started buying Thursday. It was 17 red and green. Then we bought a third of it. Then we bought a third Friday. It was 18 red and green. We just put our last third on this morning, 19 red and green. Now, I'm not really that happy with McDonald's because I think my account's down 35% right now, the last time I looked. And that's just today. Now, granted, we were even Friday, right? So 35% down today is how much the account's down. And that's not fun. Excuse me. But for those that have been part of this platform and this program for quite some time, when you're dealing with options that move very quickly, we've said how many times you have to have the stomach to deal with it. For instance, Friday, I believe we sent out the email in the morning and shared that our position was down 40%. Well, by the end of Friday, that position was down only 17%. In fact, the other position that we bought was up 20%. So in a matter of one day, that's how much it swung. Is that a word? What's the past tense on swung? I guess swung is the past tense of swing. Anyway, that's how much, right? So let's talk about our McDonald's position. Our McDonald's position is for April, not for March, April, meaning we have, I believe, 39 days for it to work out. Now, our McDonald's position is for 250s, which really out of the money at this point. So last time I looked, the McDonald's was 229 and 240s, right? Now, McDonald's has gone down pretty much in a straight line. It was 270 a couple of months back, maybe 2 months ago. And one could say, well, Anthony, well, duh, we know why McDonald's is down. It doesn't take a genius to figure this one out. In which case I say, well, please enlighten me. Why is McDonald's down? Well, 9% of the revenue of McDonald's comes from Russia, right? They have 897 restaurants in Russia. What is McDonald's? It's a restaurant. What is their input cost? Commodities, agriculture. What's their output cost? The finished product, right? So in an inflationary environment, McDonald's is probably really not good to own, right? Because they have to buy the wheat, they have to buy the meat, they have to buy the cheese. And if all these prices are going up, well, then their input cost is going higher. Their margins are going lower. They have to pay more money for the same goods, right? So that sounds really bad. Also, the US dollar keeps going up. Well, McDonald's is a very international company, which means as our dollar goes up, then the currency that we're bringing in from other countries is worth less, right? So say, for instance, McDonald's sells a burger in Europe, and that burger brings in €1, right? And the numbers, we're using just numbers for example, right? So that burger brings in €1. When you convert it over to dollars, that might equal $1.15. Well, now that equals $1.08, meaning that the money they're actually bringing in is going lower due to currency conversion. So they're getting beat up on the dollar going higher. They're getting beat up on input costs because of inflation. They're getting beat up because 10% of or 9% of their revenues is in Russia. They're getting beat up on the message boards because everyone's saying McDonald's should boycott Russia like everyone else is boycotting Russia. I think I even saw something where one of the franchises was suing them for $900 million because they said that they went ahead and put a code inside of their ice cream system that allows it to break on purpose so that it gets repaired because they have contracts with repair companies, right? Oh, sounds really bad. And the market's going down every day. Well, those are good reasons not to own McDonald's. A week ago, right? Because everything I just shared with you, everything that we've talked about so far today is already known. How many times did we do this together? Everything that we shared is already known by every market participant. The market reflects everything that we're talking about. Everyone knows we're at war. Everyone believes that it could go to nuclear war. Everyone believes that Russia's playing chess better than Joe Biden even knows how to spell checkers. Everyone believes that McDonald's on every level is a terrible investment, that every part of their company is getting beat up. So why am I buying McDonald's? Because I choose to buy good, solid American companies that are part of the Dow Jones Industrial Average, that do their business in US dollars when a market is down, I don't know, 10, 15%. When the stock is down from 270 to 230, and the company has so many different headlines that are all bad, and that it's a 19 red and green. I like that. And I have 39 days for it to work out. So you know what? My account, the last time I looked, was down 35%. And look at me. Do I look mad? No. If I could go back in time, would I start buying today rather than Thursday? Yeah, of course. That's not a matter of pride. In fact, if you don't say that, you're a fool, right? Like, with the benefit of hindsight, would I have liked to have purchased at today's price rather than the higher prices the last 2 days? Yes. But how did we buy? We bought 2 months out, right? Because last week was what, March 3rd, March 4th. We're buying April, so please forgive me on 3 days, but 2 months out, right? We bought $10 out of the money. In fact, when it went down, we bought a lower option strike. We bought when it was 16, 17, 18 red and green. We bought in thirds, a third, a third, a third. In fact, the price today, one could say, well, Ant, you're down 35%, you're getting beat up. Well, I bought today too, right? Like, it's not like I just watched it and I was like, oh, darn, what am I gonna do? No, I was actually happy. If you have the courage, right? Like the courage, then you would know, okay, it's down today. This sucks, but that's why I have money. That's why I left it there. That's why I bought it today. So I have representation in the price that it's at right now, wherever it is. Well, if it's under 229, which we will look, then I don't have representation there because I bought it at 229 as my last purchase today. Is there a possibility that I might come out of pocket and put more money in the account and buy more if it goes lower? Yeah, maybe. Because am I going to watch McDonald's at a 20 red and green, a 21 red and green, and sit there and say, oh my God, I'm so scared. I can't believe this. No, I'm going to say, if I knew nothing about the world, I would be buying hand over fist right there. So maybe I will. I have no idea, right? Like, let's see what happens. I probably won't do it tomorrow, but if it goes to like a 21 red and green, right? Like, I'll put more money in. But I'm very comfortable with my position now. I would rather it not be down, but who knows? If you give me a market that's up 2 days in a row, I'm probably going to be positive and probably buy a lot, right? Like, that's the way this works. So that's our commentary on the markets. That's our commentary on McDonald's. That's our commentary because, you know, one of my best friends messaged me last night and I told him McDonald's and he's like, yeah, well, it's been in a downtrend and this. And it's funny because we're in this we spend every Monday together, right? So I can talk to you because we know what we're talking about. When you talk to someone from like the real world that has no idea what's going on in the markets, I didn't have the time to go ahead and write back to him and try to educate. Well, everything you're telling me is already known, right? Like that's the way stocks work. When everyone's happy and they're optimistic, they buy it. When everyone's scared and pessimistic, they sell it. So at max optimism equals the top of the stock because everyone bought it. At max pessimism is the bottom of the stock because everyone sold it, right? So if everyone's telling me how stupid I am because McDonald's and this and the US currency and Russia and oil, well, I'm feeling quite good. I look at everyone and say, please tell me more about why I'm so stupid, because the more you tell me, the more I know everyone else knows, which means every person that owns McDonald's right now at this second believes everything and knows everything we just talked about, which means the only way it goes down from here is twofold. One, the mechanics of the market, right? Like, does someone have a margin position that's being called upon? Is some fund liquidating? Stuff like that, and those are all temporary. Those are just mechanical things. So it could go lower based on some type of mechanics. And the other thing is if there's new information. Now, what would be new information to the market? Nuclear war, right? I think we're actually at a point right now that short of nuclear war, this market is going to rally back like you've never seen before. In fact, we have the Federal Reserve, their rate decisions next week. Does anyone even talk about that anymore? No. And I'll even tell you this, because every currency around the globe is getting, beat up, and go take a look at the dollar conversion to pounds and euros and yen. They're all underperforming the dollar, so you have money flowing into the country. You have a market going down while money's flowing into the country. On top of that, if the Fed goes ahead and raises rates, which we now believe that they will, they'll probably do a quarter, and we don't know if they'll do much after that. We'll see. But the fear has always been that all things being equal, if there's no money flooding into the country, then by raising rates, you're going to flood money out of the country. You're going to flood it out of the bonds, and that money would go into stocks. But there is a matter of those yields getting so high that you could bankrupt the country. That was our fear, right? That's what the math said. Well, the math has changed. And that's not because we're so silly we didn't have the right calculator. It's because with war, what that does is it's sending money into the safe haven currency, meaning if we raise rates and offer new bonds, people will buy those new bonds because they want the currency, they want the dollar, they want the safe haven. On top of that, if the people that have the bonds that are yielding less than the new bonds start selling at any kind of like fire bottom price, right? Like people all of a sudden just start saying, oh my God, they raised rates, I'm going to sell. They'll be buyers because people just want the currency at this point. Therefore, the Fed, maybe by chance or by coincidence or by design, has found themselves in a very good situation where they can raise rates and not worry about anyone leaving because everyone wants the dollar. So if you want the dollar to the point that you're going to buy bonds that go down in value, why wouldn't you buy the trophy assets of the country? Why wouldn't you buy the Dow Jones? Why wouldn't you buy McDonald's, right? Now, the Fed is March 14th, 15th and 16th. So next Tuesday and Wednesday. We see that after that, there's just clear skies ahead, right? Like I don't, short of nuclear war, there is nothing to be worried about. In fact, this market has priced in so much fear that if I just had a bunch of money right now, I'd be buying stocks hand over fist. I really would. And again, short of nuclear war. Now you might say to me, well, Ant, short of nuclear war, there's going to be a nuclear war. Didn't you read the news? I got to tell you. Now, nuclear war is like really bad, right? Like a lot of things, like everything crashes. But a lot of things are priced for nuclear war already, right? Like, and I'm being a bit facetious, right? Everything will go down. But Facebook at 200, it used to be 350, right? Like Google used to be 3,500. It's now like what, 26, 2,700. Amazon was approaching 4,000. It's now what, 3,100. I don't see them in front of me, right? McDonald's was 270, now it's 230. You know, Netflix was 700, it's now 300. I'm not saying things won't go down, but there's a lot of bad priced into everything. So if you believe that, and don't talk about anything that happened, but if you believe from this point forward, more good than bad is going to happen, you have quite the opportunity, right? And we say that, and we know there's a lot of new people in here. It's easy for anyone to say that with the benefit of a market being down and somebody meeting them for the first time that day, right? Whenever I listen to CNBC and they bring a new person on and the market's been down 1,000 points, whatever, they're easily able to come on and say, you know what, at these levels, we see more good than bad going forward. So if you have a long-term stomach and you could handle the variables and the volatility, we believe that this is a very constructive point to start putting money to work, right? I think they read that, right? Like everyone says that. Well, yeah, that's really easy to say after a market's been down. And it's really easy to say that when the market continues to go down, they don't bring you back on. So theoretically, everyone, every single day could say the same exact thing and never be held accountable to it. We on this program are held to account. We're here every single day. The Facebook group is every single day. The live is every single Monday, but it was, 5 weeks in a row, every single day. We post all of our trade. We are the most transparent, accountable, anything ever in the history of the world, right? I just wanted to hug you, sorry. So we believe that all to be true right now. And that's with the benefit of, you can take a look at the trades. We've made money these last 2 months, right? We've made money on things going down. We've made money on things going up. We've done well. So I have a surprise for everyone today. I don't know where McDonald's is. I really don't even want to look at it. The only reason I'm even going to look at it is because we're going to be together. Because normally I wouldn't even look at it. And so I do want to say something. So we always say that we don't buy before 10 a.m. But because it was a 19 red and green, I wanted to buy. I'm comfortable 19 red and green, I could buy and be quite fine, right? But to that point, when I got on, it was 229. I started buying it 231. Maybe it's 227 now, I have no idea. The point being, if we held to you don't buy before 10, we'd be better off. Now, I purposely did it because at 19 red and green, I just want to be in, right? I believe that the risk was more towards a rebound than to it continually going lower, but that doesn't mean I'm always going to be right. It seems like it did go lower. Anyway, so I have a surprise for you. I can't wait. I'm so excited. So for the longest time, everyone has said to me, and so when stocks are low, we do good, right? Because we're able to identify the one. Oh, hey. All right, so we're able to identify the one that's a bit exhausted, right? And 16 red and green, 17 red and green. But what about for when stocks are overextended, right? So we're able to identify the stocks that are too low and are going to pop up. But how do we go ahead and identify the stocks that are too high and going to crash down? And that's been a challenge. You would think, okay, well, just like Missy Elliott said, flip it and reverse it, right? Like, okay, Aunt, you did this, we'll just flip it and reverse it. And it doesn't work like that. I wish it did, but it's not that easy. But I have been, amongst all the other things that RHINO does, this has been on my to-do list. And I'm pleased to say that I believe that we went ahead and solved that. So I did code out a little bit more over the last couple of days on how to identify a stock that's too high, that is prone to, that we could buy with the same type of confidence, right? Like when we buy something 19 red and green, we actually do it with quite confidence. Is there a way to go ahead and find a stock that's say 19 something and have the same amount of confidence that we could buy the puts that it's going to come down? So I just coded it, right? So it's not 100%. No, nothing's ever 100%, but we're going to test it together. But I did do it. All right, so let's do a screen share and see what's going on in the world. All right. Oh, great. Oh, McDonald's is 228. That's wonderful. That makes me so happy. But I'm not loving it. Okay, anyway, so I'm not even gonna look at my E-Trade account because it's probably getting annihilated right now. All right, But we have 39 more days. So let me say this very clearly. If you did not buy McDonald's, congratulations. I would switch places with you right now. I would take all of my money and I'd buy McDonald's. That's what I would do. And I would buy it in April. I would even buy the 230s because you now have the benefit of being under 230. I own the 240s and 250s, but I would take all of my money and I'd buy all the April 230 calls and I would be the happiest person in the world. That's what I would do. Okay, so let's take a look at what's going on here. Let's refresh it. Okay. So we see the Dow Jones down, however much, whenever this thing decides to refresh, down 400. That's 1.19%. The S&P 1.35%. The NASDAQ 1.62%. The Russell 0.35%. The VIX up 5.69%. So what does that mean? So the Dow Jones is outperforming these three indexes. Now the Dow Jones, like we've always said, is the trophy assets of the country. What do we mean by that? They're the 30 most important companies in this country, right? Apple Computer, Microsoft, Salesforce, Pfizer, Home Depot, Caterpillar, McDonald's, Disney. I mean, and it goes on, right? These are the companies that they represent the country. If we had representatives and we said, hey, listen, we're going to send you you want to know what it's like to be American? We're going to send you 30 companies that we will stand behind, we will defend, we will make sure any and everything that ever comes near them, we will go ahead and protect them. Like Home Depot, that's the Dow Jones. Meaning the Dow Jones is very important as a monitor of flow coming into the country, right? So when other countries like sovereign wealth funds and people looking to get out of their own money, right? Like people that are selling Russian stocks and they're like, I don't want my money in Russia anymore. Where do I put it? See, what you don't understand is because you're not a billionaire. I'm not a billionaire. We don't have the problem of, and we live in a good country, right? And I know some of us that are on this live in Europe. Nobody on this lives in Russia. I know that much. And not because we don't have Russians, but because I could see no one's from Russia. The point being, we all live in good countries, right? Like we never have a fear of, oh my God, I better get this money out of the bank right now or else it's going to be taken from me. But if you did live in those countries and you did have that fear that you had $1 billion that might get taken from you if you don't get it out of the bank in time, what do? Where do you put it, right? So that's what the Dow Jones represents. So some Russian oligarch that's like, I can't have my money. I need to put it somewhere. You know what? My billion, put 100 million in Microsoft, 100 million in Apple, 100 million in Home Depot, 100 million in Disney, 100 million in Caterpillar, 100 million in McDonald's, 100 million in Pfizer, 100 million in Salesforce. You get the point, right? By doing so, now his money is guaranteed. It's in the United States. It's with the biggest companies in this country. It's in the US currency, and it's in a market with a Federal Reserve and a political system. Now, mind you, I'm not happy with our political system, right? But I live in a really great country that, like, I don't feel like I'm going to jail because I'm saying something, right? All things being equal, I believe I live in the best country. And that's a little biased because I haven't been to other people's countries. But from what I see, I believe I live in, I'm very privileged to live in the US. I can sit here and yell and shout about all the things that I dislike about our political system, but I would never leave it. I would take it over everything else, Biden included, right? The point being, I never had to worry about, oh my God, where do I put my money? But those other countries, those other people do. So when they're looking to store their money somewhere and hide it, you see it go in the Dow Jones because it's our trophy assets, which is why when you see it down less than all the other ones, it's telling you, A, there's less selling, and B, there's more buying, right? Duh. But if there's people, if they're less selling it and you know the shareholders and why they're in it, well, then that means that people that are in these companies want to stay in these companies. If there's more buying in it, people that aren't in them are looking to get into them. All things being equal, these stocks are outperforming these stocks, outperforming these stocks. Excuse me. The S&P 500 is the 500 largest companies in the entire globe. Is a benchmark index that all mutual funds, pension funds, hedge funds all rate their performance against. It is free to buy the S&P 500. Well, it's like 0.01%. but it allows you to get market returns. Oh, I bought the spiders and I made 10% this year. SPY is the ticker, spiders is the what we call it, right, in the biz. So if a hedge fund is like, hey, listen, I could outperform the S&P, well, you better if you're going to take my money. So this index is very, very important to portfolio managers. So when you see this getting beat up, you see them selling it. When you see this doing well, it's portfolio managers putting more money in the market. The NASDAQ is your go, go, go. These are your retail stockbrokers, your mom and pop, your hairdresser, your Uber driver. These are all the companies that are super exciting. Oh my God, this company's going to go ahead and cure cancer. It's in the NASDAQ. You've got to buy the pharmaceutical. Oh my God, this company's going to be. Those are those companies. And 1 out of 10 of them changed the world, right? Like Apple Computer, that was a good one. Google, that was a good one. Pets.com, not a good one, right? And if you don't know Pets.com, that stock in the tech bubble was like a bazillion and then ended up at zero. In fact, in the tech bubble, Amazon went down 96%. So things could go down, right? Because Amazon did pretty well after that. But when you see this going down, that's a lot of your retail money getting out. That's a lot of your stockbrokers and everyone like, oh my God, Mr. Jones wants me to sell it and he's going to sue me because I charge him 5%. These are like the not good people. But some of the things in the index work out. This is interesting. The Russell 2000 is your 2,000 smallest companies in the country. Well, not the smallest companies, but I think they're like 1 billion to 5 billion. It's those 2,000 companies. Meaning there's actually, I think it's 500 million to 5 billion. Something like that. They're not micro, but they're the smallest ones. Meaning they're the ones that are most economically sensitive to the economy, right? Because they're new companies, they're small companies. If something doesn't go right, it's not like they have billions sitting in a bank account that they can withstand the storm. So these companies are always the ones that go up the most when you're going into a good market. They're the ones that go up the most during a good market, but these are the ones that will go down first when the market turns. Meaning, if the belief was that things are going to get super duper even worse going forward, that the future looks like absolute garbage, these would be the ones that would get annihilated. In fact, during this whole downturn, these are, I believe, down 25% versus the NASDAQ, which is down like 16%, versus the Dow that's down, say, 10%. So they went down the most, and rightfully so. But they're not still going down the most. These are telling you they're very exhausted. What else do these tell you? Because of their size, they are the best candidates to be purchased, right? So a company like Microsoft or Apple that has all this money and they want to go ahead and grow their company, they take a look around like Warren Buffett does and say, okay, what companies are undervalued? What company stocks are down? I want to go ahead and buy the whole company because I have cash and they're trading at nothing. I'll buy them. This is that bucket. So when this bucket is outperforming all the other ones, it's telling you one of and or two things. The economy is going to get better going forward than you think it is, and or companies are buying other companies, meaning the money's staying in the stock market and more money flows coming into the stock market. Both of which would tell me that I'm comfortable being in this market because this is now the leader today. And when the Russell is leading, I'm quite comfortable. If you take a look at the VIX, it's up too. It's at 33.99, but what was it earlier last week, right? So let's take a look at a 5-day of it whenever this thing comes up. And what you'll see is it was higher last week at the beginning of March. In fact, yeah, so that was, okay. So this is the high, 35.12. No, 35.19. It's now 34, right? So does it get over 35? Does it make that new high? I don't know. But if it doesn't, it shows you that volatility is not getting as much, right? So we have 16 minutes left. I do want to show you the cool stuff, but we are going to do the work. Let's spend 1 minute looking through this page. Let's see if there's certain headlines that catch our attention, right? All right. Icon exits Occidental. So Occidental is a petroleum company that Warren Buffett just bought a stake in. I believe the company is at like $40-something. Actually, it's probably there somewhere. No, I don't see it. It's like $40, $45. It's up a lot. But Carl Icahn had a stake in it 2-3 years ago. He got in when it was like $17, $18. So he's getting out of oil. Carl Icahn, who rode oil from 17 to 45, the stock price is getting out. Now, what do we say? you have big money, you get out when you can, not when you want to. Because when you have such a big position in something, by selling it, you bring the whole price of it down, unless you sell it during a time where everyone's looking to buy it. Warren Buffett getting into it means a lot of people are buying it because everyone's like, oh, Warren Buffett's buying oil here, let's get in too, which allows Carl Icahn the moment of high volume to get out, which means what does Carl Icahn, what is that saying? It says a couple of things. One, he made a good profit and he's looking to cash in. Two, he has cash now. Why does he want cash? Presumably because he sees other opportunities out there. So he wants to get it quick enough to put it back to work. But three, what does he think about oil? That for the bang for his buck, that at the very least, sitting in cash is going to perform better than sitting in an oil company. But presumably that cash is going to redeploy to something else because there's many opportunities out there, which is exactly what the Russell's telling you. There's things to buy. So this headline seems innocuous. It's 3 words, but when you know the story, you can say, all right, there's one of the smartest guys in the room thinks oil stocks are getting towards the top and he's looking to buy stuff. I'm okay with that, right? Look at VIX, now back down to 34. Amazon acquires a startup. Okay, so people are buying. Kohl's plans smaller shops, wants Sephora to hit 2 billion in sales. Okay, cool. I'm glad you want that. New Jersey governor, I certainly hope we're done forever with mask mandates. We're in midterm elections. Anyone that remembers the New Jersey governor, like a year ago, Phil Murphy, he would have tattooed a mask to your face. Now he's saying he hopes it's done forever. These are sound bites going into elections. They're politicians. They're all dirtbags. Ukraine says Moscow seeking to manipulate ceasefire agreement. Okay. Bed Bath & Beyond surges as GameStop chairman reveals big stake. So chairmen of other companies are buying stakes in other companies. That doesn't tell me that everyone's scared. These are the people that sit in the boardrooms that know what's going on and they're buying each other's stocks. Why? Because the price is conducive to it, right? Bill Ackman says Russia's attacks on Ukraine means World War III has likely already started. Thanks, Bill. Now, Bill Ackman, I'll tell you something. He's the most self-aggrandizing person ever. He will say anything to go ahead and benefit his position. In fact, if you remember March 2020, the day he bought stock, he came on and said that the US is going to go out of business. Everything's going to go out of business. This disease is going to ravish everyone. There's going to be a lot of people that die. Now, you might say, well, that all did happen. He was pretty smart. That's not what the point is. He came on public TV on CNBC and announced and scared the bejesus out of everyone, then bought all the stock when it was at a low that day. So when he says things, it kind of seems like he's getting towards the low. Okay, let's see if we can scare people one more time and then I'll buy. So that's what that headline says to me. All right, so let's go over here. Now, wow, McDonald's, you actually cannot go any lower. You're at the low of the day. You're really, really, McDonald's, you're really something else. Okay, anyway. Why is it a 20? Oh, okay. I was going to say that's not McDonald's. So this stock, we've been waiting to see if it turns red and green because we want to share it with everyone. It's a 20, but it's not red and green. Anyway, McDonald's is down 7. You got to be kidding me with this. Anyway, so as you'll see, there's something different down here. Now, this is a stochastic indicator. Stochastic is it's a complex form of calculations related to algebra, and it measures the rate of changes of things, and not only the rate of change, but the derivative rate of change. So the rate of change, and then calculates those two against each other. Long story short, when it's really low, it's bottomed. When it's really high, it's topped, right? So if you take a look, so look at this. It was actually at the top line, came down. Up close to the top line, came down, right? So let's see, can we find at the top line again? Oh, look, it went over the top line. Oh, you mother. Okay. So it went over the top line, came down. Oh, it's really at the top line, came down, right? So we're pretty confident in its ability to read the lines per se. So what about when it's at the bottom of the line? Because that's kind of what we're going to be showing you right now. Oh, it's at the bottom of the line. Woof. Came up, right? So the lines are responsive, and we know that. Okay. That's an ugly looking chart, right? Like these are not the McDonald's arches I want to buy. Ba-da-ba-ba-bo. But I do own it, so go figure. Leave it to me to buy a stock that's down $7 in a day. Anyways, so the point of what I'm trying to share with you is 19 red and green. We love it, cool, such wow. But what does this mean? Now, I did find a stock. Okay, so take a look at this. American Waterworks. Look, we have new numbers, a 10 and 11 on the top side. Okay, so 10 and 11. And how do we use these, right? Like, what's the point of it? Well, we're trying to get to a point where this number gets high enough and that this line touches the top. And we think that's probably around a 14 and line touch, we'll call it. Well, I got a 14 line touch, a 15 line touch, a 16 line touch. And when that happens, we believe that you'll see it pull back. So we got Con Edison, right? Consolidated Edison. So it's at an 11 and it's getting close to the top line. So does that mean it's getting close that it's as high as it could get and it's going to sell off? I don't know, maybe. Let's take a look over here. What happened last time? It was over the top line, 11, 12, 13, came down a little bit, but then hung around, then came down a little bit. So that wasn't a good example. Now, I don't think I've seen yet let's see. All right, so here's a good example. And then we'll get going with this. Right? No, where is it? Oh, here it is. Okay. All right, what do we see here? 10, 11, 12, 13, 14. Now you see this green line, it crosses underneath that dot from the top side. When it crosses underneath the dot from the top side and we have a 14, we could feel pretty good about that. Now we're gonna obviously back test this. Let's see if we can actually just have some fun with it, right? So let's take a look at the S&P 500. Let's take a look at Microsoft. Okay. All right. So 10 and 11 crossed over, but it's only a 10 and 11, right? So here's a 14 crossed over, but didn't really go down much. Here's a 15 crossed over, went down. Oh, look at this. Here's a 19 crossed over and came down, right? Here's a 14 crossed over, came down. 10 or 11 crossed over, came down. So the point is, it's not perfect, but as an indicator, to have something that finally gives us the opportunity to see things from the other side when things are too high, that's really, really super cool. So we're going to make good use of that as well. And just so I could, yell and shout a little bit, look at Home Depot. No matter what the market's doing, Home Depot still does well. And we were there at 311 and didn't pull the trigger. Super duper list. McDonald's just is going to go to 0 today. That's cool. All right, so let's take a look at what everything is before we get going. So McDonald's is 19 red and green. VFC is 17. Morgan Stanley's a 16. Bank of America is a 16. Vitris is a 16. State Street's a 16. DXC is a 16. Citigroup's a 15. Bank of New York, 15, Wells Fargo, 15, Russia is a 10, and that's curving up underneath. If this is actually really interesting because this is probably going to curve over that dot. And when that happens, the bottom's in. And if you take a look, Russia's low of the day is 505. The low of the day Friday was 5. So it actually has a higher low down on lesser volume about to curve over. I gotta tell you, I think if you're feeling kind of sexy today, and you want to go buy Russia, I think you should. Not I think you should, right? Does that sound like a suggestion to those that are new? if you're not licensed by the security industry in the United States, you cannot legally give securities advice. So we do not give securities advice. If I had no positions today, I would buy a little Russia. All right. JP Morgan's 15. Why do I have Russia over there? Oh, because it was red and green. And then these are the ones getting a little high. Okay. So what we'll do is, let's move this out. All right. Jeez, with this McDonald's, my God, how is it possible that I get the worst stock ever? And guys, so actually for those that are new, there is an indicator. It's called Anthony wants to throw his computer out a window. And I got to tell you, we're really close to that with this McDonald's. So we're going into our Facebook group, RHINO Wealth, whenever the computer wants to work. And we're going to go ahead and I don't need to be an expert. I am whatever. All right. For those that may not be in the group already, you really should be. All the everything that happens in real time, I post in the group because I don't want to email everyone 1,000 times. So sometimes you might not see something until the next day. I did set it up for automatic entry. So what is this? See, we're just letting everyone in that knows somebody, which is totally cool. All right, so anyways, that's our presentation for today. McDonald's is literally at the low of the day. I am the least happy person. I will not look at my stock account, but I can tell you I have 39 days for this to work itself out. And I feel just fine about that. All right, we'll see you next Monday. We will be sending the emails every single day. As you know, you'll get them 10 a.m. with the updated super duper numbers and commentary and any type of transactions. Also, you have, oh my God, it's now 2:27. My God. You also have the link to our personal ledger, and that's that. So have so much fun. Love everyone. I'll see you next Monday. Make sure, so all the emails that we sent out a new email format that's congruent with the site refresh. Today at 2 o'clock, V will be hosting our first of 4-week worth of series, direct from the Small Business Administration of the United States of America. We were able to secure the SBA produced tutorials. She's going to moderate and present because everyone needs to, I think it's good if everyone knows the A's to Z's, ABCs of the SBA. And in doing so, if we're able to convert you from an interested party to a small business expert, and then be able to then list you on the greatest small business listing service that the world does not even know about yet, you'll be quite happy. So please participate. Yeah, my pleasure. Mike, if you could do a McDonald's dance, maybe go buy some McDonald's today, we'd really appreciate it. Love everyone. Bye, guys.